Hello viewers, welcome to my channel. I'm Hashim. Last video, 3 problems I have completed on capital gain. Now in this video, 4 more problems, 4, 5, 6, 7, I am going to explain you. So after listening these lectures, after attending these classes, definitely you will feel confidence in the subject income tax. But remember, the problems are based on the provisions. So first, before starting the problem, you should be perfect about the provisions of Income Tax Act. That's why theory video is very important. So the theory is same for the last year and current year. Only tax structure has been changed. According to the default tax scheme or the optional tax scheme, tax rates are different. But the provisions of computing the capital income, capital gain is same. So if you have not watched, I suggest you to go to the playlist of my channel, select the subject income tax for the assessment year 23-24. That is the last assessment year. So videos are there. So take out the videos of capital gain theory. Watch the complete detail. Then you can understand the problem easily. Now before starting the 4th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Take the screenshot of the points, then I'll explain every point in detail. Come on, see the problem number 4. Sri Jayaprakash purchased a sculpture on 25th June 2001 for 2,50,000 and is sold for rupees 11 lakh during the previous year. Selling expense are 10,800. Calculate capital gain in the following 2 situations. Situation 1, if it is sold to Mr. Ravi Teja of Haryana State. Situation 2, if it is sold to Jawaharlal Nehru University, Delhi. First of all, the asset is a sculpture. Remember, painting, drawing, sculpture is also capital asset. So if sculpture or painting or drawings are sold and gain arises, that is a capital gain only, taxable. So the new point is sculpture is a capital asset, gain arising is a capital gain. Now the question is, 2 situations are given. First we attempt the first situation, if it is sold to Mr. Ravi Teja of Haryana State. So sold to Ravi Teja of Haryana. First of all, you should write down computation of long-term capital gain of Mr. Sri Jayaprakash for the assessment year 24-25. Then you should write down consideration received 11 lakh. It is given in the problem. The sculpture was sold for 11 lakh. And transfer expense are also given. Selling expense 10,800. Selling expense or transfer expense means same. Deduct 10 lakh 89,200 is the net consideration. From this indexed cost of acquisition, because more than 3 years, the asset was held for more than 3 years. So 2,50,000 into 348 divided by 100. If any asset is purchased during the assessment year, during the previous year 2001-2002, the index number is 100. It is not given in the problem, but you must remember, the index number started from 2001-2002. 100 is the index number at that time. And current previous year 23-24, for this the index number is 348. Even if it is not given, you must remember these 2 index number. Current previous year and the index number in 2001-2002. So here 348 by 100, you will get 8,70,000. The long-term capital gain is 2,19,200. It's a taxable long-term capital gain, right? Now situation, sculpture is a capital asset, so gain arising is a capital gain. Situation 2. Situation 2 says, if it is sold to Jawaharlal Nehru University, Delhi. Income Tax Act has given the provision. If the sculpture, painting, drawings are sold to government or to a university, then it will not be treated as sale. It will not be treated as transfer. So gain arising is not taxable because it is not a transfer itself. So here painting, drawing, etc. are treated as capital asset, but sale to government or university or national museum is not considered as transfer. Hence profit on sale should not be considered as capital gain. That is the exception. That's it. This is problem number 4. Now problem number 5. Sri Harsha is owning a house and used for residential purpose. The house which was constructed for 1,80,000 40 years ago, on 11th July 1995, he entered into an agreement to sell the house to Mr. Abraham for 8 lakh and received 80,000 as advance. Mr. Abraham failed to pay the balance amount and consequently the advance money is forfeited. Now see here. Whenever advance money is forfeited, you have to remember the date 1/4/2014. On or before 1/4/2014, the advance money forfeited should be deducted from the cost of acquisition. If the advance money is received and forfeited after 1/4/2014, it should be treated as income from other source. Already in the previous video I have explained this point in detail. Here the advance money was received and forfeited before 1/4/2014. So this advance money forfeited should be deducted from cost of acquisition. Write it down. Always maintain running notes. The house is sold during the previous year for rupees 90 lakh and the selling expense are 1%. FMB on 1/4/2001 was 15 lakh and the stamp duty value is 14 lakh. Now remember, if an asset is purchased before 1/4/2001, the assessee can choose the actual cost or fair market value, whichever is higher. So here he will not consider the purchase price of 1,80,000 40 years ago. He will take the current market price on 1/4/2001. 1/4/2001 it is given as 14 lakh. No, 15 lakh. How much? 15 lakh is the stamp duty on, okay. FMV was 15 lakh and stamp duty was 14 lakh. Again one provision. In the previous video I have explained. The FMV should not be more than the stamp duty value. The FMV should be less than the stamp duty value. So whichever is less we have to take. Here 15 lakh is the FMV, but stamp duty is 14 lakh. That means FMV is more than stamp duty. It should not happen. The FMV should not be more than a standard stamp duty value. So lower of the two. 15 lakh or 14 lakh. 14 lakh is the lower amount. From this 14 lakh, deduct the advance money received and forfeited. How much advance money was received? 80,000. 80,000 was received and forfeited. So that 80,000 we will deduct from 14 lakh. So 14 lakh minus 80,000. 13 lakh 20,000 is the cost of acquisition. During the previous year, 2002-2003, one more floor is added to the building at a cost of 6,30,000. Inflation index 105. And during 2008-9, 3 lakh rupees is spent on renovation and painting. Cost inflation index 137. Adding more floor is a capital expenditure. That should be taken as cost of improvement. But renovation and decoration, painting, these are not capital expenditure, these are revenue expenditure. So it will not be taken into account as a cost of improvement. There is no improvement. So in working note, you should write down the amount spent on painting, renovation is not called improvement. This will not be considered while calculating income from capital gain. Then calculate income from capital gain and tax liability under default scheme. And if income from other head is 1 lakh, that's it. So many new points are there in this problem. So take more interest. Normally student says income tax is a tough subject. No, it is not a tough subject. It's very live subject, interesting subject. Provided the students must have the interest to learn the subject. If your ambition is just to pass the examination by getting minimum marks, you can be able to pass. But don't keep it as your objective. Your aim should be to learn the subject to get maximum marks from the subject. From that, mentality if you have, definitely you can enjoy learning income tax. So many new points we came across in this problem. Now we'll go ahead. Sri Hasham. Here I am writing only Sri Harsha, but in examination you should write on computation of long-term capital gain of Sri Harsha for the assessment year 2024-25. Now consideration receipt. At what amount it was sold? 90 lakh. Transfer expenses 1%. It is given in the problem. The 1% of 90 lakh is 90,000. 89 lakh 10,000 is the net consideration. Now indexed cost of acquisition and indexed cost of improvement. Both we have to deduct. First of all, indexed cost of acquisition. What is the cost of acquisition? In working note you should write down. The advance money received was forfeited before 1/4/2014. So it should be deducted from FFB. Cost of acquisition में से निकालेंगे, minus करेंगे. So here, hence cost of acquisition is equal to 14 lakh. Now here, if you compare SDV, stamp duty value, and FMV, lower of the two should be taken. 15 lakh rupees is FMV and stamp duty value is 14 lakh, whichever is lower. So 14 lakh is considered as FMV. From 14 lakh, deduct the advance money received, 80,000. So here, the cost of acquisition is 14 lakh minus 80,000, 3 lakh 20,000. 13 lakh 20,000, not 3 lakh 20,000. It is 13 lakh 20,000. FMV should not exceed the STV, hence FMV is taken at 14 lakh. Now, so 13 lakh 20,000 is the cost of acquisition, into 348 is the current previous year index, and any asset purchased before 1/4/2001, the index number should be taken as 100. So multiply, you will get 45 lakh 93,600. Now indexed cost of improvement. Some additional rooms were constructed by spending the money. How much? 6 lakh 30,000 given in the problem. Current to previous year index 348. Index number of making improvement 105. So it will become 20 lakh 88,000. Take the total 45 93 600 plus 20 88,000, total 66 lakh 81,600. Now subtract 89 lakh 10,000 minus 66 lakh 81,600, 22 lakh 28,400. That is a long-term capital gain. Finished. Now income from other heads is 1 lakh. Actually the basic exemption limit in the new tax regime, default tax regime, is 3 lakh. So if a person, if an assessee is having less than 3 lakh rupees other income, then whatever deficiency is there, that deficiency should be deducted from the long-term capital gain. Write a note of it. Very important point. I am not writing all these things on the board because it will take more time. The basic exemption limit in the new tax regime is 3 lakh. If a person is having other income less than 3 lakh, then whatever deficiency is there, that means 3 lakh minus 1 lakh, 2 lakh is the deficiency. That 2 lakh rupees will be deducted from long-term capital gain, and resulting is the taxable long-term capital gain. So here therefore deficiency is 3 lakh minus 1 lakh, 2 lakh. Now the deficiency of 2 lakh should be deducted from LTCG. LTCG 22 lakh 28,400 minus 2 lakh, we'll get 20 lakh 28,400. This is called taxable LTCG. On this tax, flat rate 20% will be applied. So 20% of 20 lakh 28,400, 4 lakh 5,680. Plus health and education says 4%, 16,227. Then tax liabilities 4 lakh 21,907. We have to round it off to the nearest 10. So instead of 07, we make it 10. So 4 lakh 21,910 is the rounded off tax liability. That's all. So many new points we came across in this problem. Next problem is sixth one. Srimati Chennamma constructed a building for rupees 5 lakh in the financial year 1985-86, and rupees 5 lakh is spent for adding one more floor in August 2001. The actual building was purchased much before 1/4/2001, and during August 2001, additional some more floors were added. She sold the building for 58 lakh during the previous year. Stamp duty value 68 lakh. Selling expense 64,000. Cost inflation index 2001 2002 is 100. FMB on 1/4/2001 is rupees 15 lakh. So actually we should take the lower stamp duty value or FMB. Here FMB is 15 lakh. So we'll take this 15 lakh. Stamp duty value is 16 lakh. Again stamp duty value is given. So here stamp duty value at the time of purchase was 16 lakh. Calculate income from capital gain and tax liability under section 115 BAC. If income under other heads is 7,25,000. So we have to compute tax liability under the default scheme 115 BAC. Now see, Srimati Chennamma, computing the long-term capital gain. Consideration received is 58 lakh. We should take the lower of consideration received or this one, 58 lakh. Transfer expenses 64,000 given. 57 lakh 36,000 is the net consideration. Indexed cost of acquisition. The purchase price or FMB on 1/4/2001 is 15 lakh. We should not take the purchase price. We should take the FMB on 1/4/2005. 348 by 100, 52 lakh 20,000. Now improvement was also made. Cost of improvement 5 lakh into 348 by 100, 17 lakh 40,000. Take the total 69 lakh 90,000. Now subtract 57 lakh 36,000 minus 69 lakh 90,000. You are getting negative figure, loss. 12 lakh 54,000. This is called long-term capital loss. First time we are coming across. So far every time we got capital gain. Here capital loss. One provision in Income Tax Act is the long-term capital loss cannot be set off from any other heads of income. It can be set off only from long-term capital gain, or it can be carried forward to the next year. Next year, if there is long-term capital gain, from that long-term capital gain, last year's long-term capital loss can be set off. It can be carried forward. But current year, it cannot be set off from any other income. So we have to stop here itself long-term capital loss. But tax liability we have to calculate under section 115 BAC for other income. So here calculation of tax liability under section 115 BAC. Other heads of incomes are 7,25,000. Again, during the current year, the new default tax regime was given by the Income Tax Act. So SSC has to follow this default tax scheme. If the SSC wants the old tax scheme, they can have the optional tax scheme. So it depends on the SSC whether to go for the default tax scheme or the optional tax scheme. In the problem, it is specifically given we have to calculate according to default tax scheme, new tax scheme. So slab income rate tax, the basic exemption limit 3 lakh. Up to 3 lakh, no tax. The next second slab is from 3 lakh 1 to 6 lakh. From 3 lakh 1 to 6 lakh, 3 lakh is the income. 5% is the tax rate. So 3 lakh into 5% you get 15,000. The next slab goes from 6 lakh 1 to 9 lakh. But our income is not going up to 9 lakh. Our income is only 7 lakh 25,000. So we'll take the balance. So out of 7 lakh 25,000 minus 3 lakh minus 3 lakh. So remaining is 1 lakh 25,000. On that 1 lakh 25,000, 10%, 12,500. Now add up. 27,500 is the tax on other income. To that 27,500, health and education says 4%, 1,100. You will get 28,600. This is the tax on other income. That's it. So again, new points. So many new points we are coming across. Now, seventh problem. See the problem number 7. Mr. Akram, age 82 years. We are not concerned. According to new tax regime, we are not concerned about the age. Purchased gold ornaments on 10th March 1998 for rupees 7 lakh. 10th March 1998, before 1/4/2001. He took a loan by mortgaging ornament 5 lakh and interest due to date of sale is 92,000. We are not concerned with mortgaging the gold and taking the loan. We are not concerned. So this point mortgaging ornaments and interest on due, that should be ignored while calculating long-term capital gain. And is sold, and the same is sold during the previous year for 30 lakh. So this is the consideration received. Selling expenses are 4,000, due but not paid. Income Tax Act says selling expenses, if it is paid, then only it will be allowed. If it is due but not paid, no deduction is allowed. New point. So in working note, you should write down, selling expenses due but not paid is not allowed as deduction. Calculate capital gain for the current assessment year. Cost inflation index 23-24 is 348. We know it. Very simple problem. Consideration received 30 lakh. So transfer expenses not allowed because it is due but not paid. Net consideration 38 lakh. Indexed cost of acquisition. The fair market value on 1/4/2001 is 7 lakh given in the problem. Into 348 by 100, you will get 24,36,000. The capital gain is 5,64,000. Long-term capital gain. In working note, you should write down that loan taken by mortgaging the gold ornament and interest is due should not be considered with calculating long-term capital gain. That's all. So for 7 problems I have completed on capital gain. Hope the concept is almost clear. One more video we will make on this capital gain, then we'll switch over to other head of income. So if you are satisfied, give a like to the video, share my knowledge, subscribe if you have not yet subscribed. Inshallah, we'll continue the next problem in the next video.